Welcome, everybody. Thank you for coming. And want to give a special thanks, too, to Comet Labs and Sophia at Silicon Valley Deep Learning for producing this event. And thank you very much to the Cooley marketing and facilities teams for hosting us here. So just a quick overview of our agenda. We've got about an hour discussion here planned for you. We'll try and stay on time. Hopefully you'll have some questions. We're going to save some time at the end for questions. I'm going to ask some questions to our panelists here around technologies and the market, around AI and robotics, and then we're going to dive into a few questions on investing in the space, early stage investing. In terms of introductions, Adam from Comet Labs. Check his email.
Adam, it looks like you were just reprimanded.
So Adam's an investment partner at Comet Labs, which is a cross between a venture fund and experimental research lab and focuses on AI and robotics. Adam co-founded a consumer electronics company and spent 2 years as the hardware lead at StartX. And he's a 2014 Forbes 30 Under 30 in energy and industry. Shahin is not quite here yet. We'll introduce him when he arrives. James is a partner of Bloomberg Beta, which is a seed stage VC firm focused on the future of work. He's been an investor in companies like Domino Data Labs, Kaggle, Crowdflower, and LinkedIn. Jean is at Data Collective, and she focuses on applying artificial intelligence to novel and high-impact problems in the real world, manufacturing, materials, agriculture, healthcare, as well as improving the workplace through better enterprise technology. And then just a couple of quick housekeeping points. Just note that we are filming this evening. Just want everyone to be aware of that. And then also a disclaimer for the benefit of my panelists here. Obviously, I'm going to assume that any opinions you express are your own, not necessarily reflective of your venture firms. So if anyone's tweeting anything, be cautious of that.
Whoops. I would just like to note that for having two panelists coming in late from San Francisco, you are remarkably unflappable and calm about the whole thing. Much like you'd expect from a great lawyer.
I was expecting none of you to show up, so this is all upside. It's not our first rodeo here. So many Cooley clients in the room that I've met earlier, Cooley clients on the panel. For those of you who don't know Cooley, just give you a little background. My name's Kevin Rooney. I'm a corporate partner here. I focus on emerging growth companies. Cooley is a large global law firm focused on representing emerging growth companies in both the technology and life science spaces and investors in those companies. A little background on us here. We think we're pretty cool for lawyers. It's in our name, of course. This slide tries to demonstrate that some of our clients actually think we're pretty cool as well. Some of our accolades. Here's a few clients that we've represented in the AI space. Very fortunate to have the opportunity to do so. And some of our great VC clients that we represent in the space, including many of the panelists here I noted. So over to the questions to get going. So first on the topic of technologies and the market generally, I'm going to start with Jean, just to help set the stage here. If you could really give us a little background on what you think AI is in this context.
Sure. So my personal definition of AI is sort of a machine perceiving its environment and being able to take in data and actually act in pursuit of those goals. And I sort of think of this as a concentric circle, which is really confusing right now because there's all of these buzzwords, right? Deep learning, machine intelligence, data analytics, big data, et cetera, that are sort of confusing the message, right? Most broadly, am I having a microphone? Am I doing something wrong? Okay, great. Now you sound less to me. I'm sure there are AIs for taking down strong distortion. It's all good. But more broadly, all of AI can consist of everything from machine learning to formal symbolic systems. Actually, most of the best AI departments started with some of those formal symbolic systems, like Minsky at MIT, Stanford, CMU. And what's really happened, though, these days is that we've discovered the power of machine learning, or computers being able to learn from data presented to them instead of having to be explicitly programmed to do so. And there's a lot of ways to slice this, but I think I'll focus on the three things that I'm seeing most in the market right now, which are statistical learning methods, or traditional machine learning, so things like clustering and FCMs, neural networks and deep learning, which have really come into vogue recently, both CNNs, which are most commonly used for vision, and then RNs, which have underlied a lot of the speech recognition technologies. And then what my background study is actually Bayesian networks and being able to reason under uncertainty. But when most companies say AI, they just mean that their product has something from machine learning, using the data that they collect to automatically improve their product. And it can range everywhere from like making slightly better recommendations to actually addressing human level intelligence. So other than a way to add $2 million to your pre-value valuation, I think that you're really seeing people think about how they can use their data and machine learning to improve their product.
Thank you. Shahin, welcome.
Great to be here.
How's the traffic?
It was tough. It was thick.
So Shahin's with Lux Capital and focuses on empowering entrepreneurs aiming to accelerate humanity towards a fantastic future through feats of engineering.
That's good.
He's passionate about artificial intelligence, the brain, robots, space, cars, and engines. So to our next question, over to Adam. What are current applications of AI that are being commercialized now?
Yeah, I think Gene touched on a few of the kind of core technologies that are unlocking a lot of this potential. I think a lot of it's happening around natural language understanding, so actually being able to take text that a human says or types and be able to figure out intent and kind of meaning and be able to solve that type of problem. Some of the techniques you mentioned were good for that. Other techniques are good for tasks like computer vision. So I think the successful applications of commercialization of AI right now are basically people who are kind of mixing and matching this grab bag of Cambrian explosion of like new techniques that came out in the past 5 years and really trying to match those up with commercial applications. So we're seeing a lot of basically anything involving language, anything involving vision, anything involving sound. I'm an advocate. Our whole fund is focused on it, so it's everything. But some of the specific applications are around automated labeling of things within certain environments, so retail environments or predictive maintenance, or being able to ingest these different forms of data and be able to do kind of preventative requisite action before anything needs to be done. I think one of the things that we've seen, I guess one point that I will say that I don't think really gets said enough is if you look at kind of the cutting edge research right now versus what's actually getting shipped in product, like that difference is actually getting pretty huge. Like how many people have like kind of come crashing into working on incremental improvements in a lot of these tools like image classification, for example, versus what's actually being shipped or what's being commercialized looks a little bit like, I think in a lot of cases it looks like a very kind of simplified version versus the cutting edge. And so I think from a commercialization perspective specifically, one of the things that we've seen companies get a lot of traction in is verticalized AI. So actually just going in and saying, I'm going to not be an AI solutions provider, I'm going to be a person who makes your inventory management problem go away. And so that's one of the things that, apart from just saying I'm going to use my algorithm because my algorithm's like 0.5% better than yours, that's not like a great way to think about defensibility. But a good way to think about defensibility is sales channels into those retail environments, for example, in inventory management, and saying like, look, once Target buys my system, it's unlikely that they're going to go buy somebody else's. And so, unfortunately, from a technology perspective, I mean, the technology is very important, but we've seen a lot of other factors influence defensibility of companies, and those are the types of things that we really consider very heavily when we look at commercialization.
So it sounds like a lot of exciting opportunities and enablement through technology. Shahin, over to you. Are there any AI applications that you've considered recently, but you think maybe it's just too early, either to support a fundable startup, either because of technology limitations or lack of market?
So I think trying to find a company. So I think it'll be difficult to find a company in this day and age that doesn't have some element of machine learning or AI associated with it. It's kind of like, 15 years ago trying to fund a company that doesn't have a computer involved. So I think if you're doing something that does not involve AI or machine learning, then I'd be curious to know how that's possible. So the question I guess the way I would ask the question is, or maybe rephrase the question is, what's interesting in AI? And I think Adam touched on that. If you look at the tools are all pretty much available. The software tools are out there, and they can be improved for specific applications. And so is there like a Red Hat equivalent or a MySQL equivalent kind of tool company around AI that hasn't been done? Perhaps. Maybe those tools are in the context of all the tools that are becoming or surfacing in the form of simulators and maps and kind of algorithms for self-driving cars and other kind of vertical approaches, or maybe end applications like end applications in healthcare. But I feel like as if the problems themselves are either have been solved or will be solved very quickly by many people. I feel like as if the data, people talk about access to data. Everybody that I talk to nowadays, regardless of what they're doing, whether it's self-driving cars or healthcare, has access in one way or another to a ton of data. The question is really, how do you build a business around this? So Adam touched on this. How do you access? Well, first of all, what is your product? What is it that you are hoping that customers would pay for? Why would customers pay for this? How is this the underpinning of an interesting business? So you start from this very, very wide top of the funnel, which is companies that are doing something in AI, of which there are countless companies doing something in AI. In fact, I think all startup companies in tech have some AI components associated with them. And then you come down through the funnel. Okay, some of them maybe have interesting products, maybe don't have interesting products. Some of them have products that maybe customers will pay for. Some of them have products that customers would pay for, and also have access to those customers. And very, very few have AI-enabled products that customers would pay for, that they have access to, that could be underpinnings of interesting businesses. That then gets us venture capitalists interested. And so I think those companies that are still in the middle of the funnel, to answer your question, Kevin, may be a little bit too early. Does that answer your question?
Yes.
Or am I creating more questions?
We should continue using the word AI in our company name.
Not AI, of course.
As long as it's not AI. As much as possible.
I think just jumping behind that, I think I had an interesting conversation just before this meeting, so it's sort of top of mind. But one of the interesting things when talking about like kind of the kind of core horizontal tool set versus the verticalized AI, I think from my perspective, like one of the reasons why it remains too early is actually a conversation I had separately with you, Shahin, several months ago. It's really, for a lot of these companies, these industries are changing so much that it's really difficult to tell how much their slice of the value chain is going to end up being in the future. So if you look at an industry like transportation that's changing kind of from the ground up, not only like the products that are being sold, but also the services and kind of moving from car ownership towards mobility as a service. Hopefully these things are ringing bells. But as you start to think about those things, it's really hard to think about what in 5 years will be a valuable piece of what used to be GM's core business of doing this thing. Their business is going to be in a much different shape. Right. And so in my opinion, from the VC perspective, not to like feel bad for ourselves, but like the thing that's hard about it is understanding what the value chain is actually going to look like in a few years, because a lot of these industries are getting turned. So it's not, for a vertical application of AI, it's not difficult to say like, oh, it costs this much for inventory checker to walk around the store, and my robot can do it at this rate, and therefore I can save you that many dollars. Like that's not a hard calculus for anybody to do. But what it is hard to do is like say that this tool is going to be something that people end up using in the future. And so I think within the world of verticalized AI, there's a lot of very specific reasons. Of course, there's things that technology just can't do, and those are maybe what you were alluding to in the question. But beyond those, like from a market perspective, like it's really difficult, both for VCs, definitely for startups, but also for the corporates themselves to figure out how their value chain is going to look different and how their industry is going to need to change. This came into stark vision when we were working with auto insurance companies as they're looking at more connected vehicles that have different risks. Like, how do you price risk for a future where a lot less is unknown? Like as one example of like a business model that would change very drastically.
And not to jump ahead to the investment part quite yet, but just to follow up on that, is that prediction something you guys as a firm are coming up with on your own, or are you looking for companies to pitch you on their vision for the future?
I mean, it's a little bit of both. I think we like to say that we focus on customer development in these really opaque industries. But with that said, I definitely wouldn't want to invest in a startup that needs us for their corporate, for their customer development. You know what I mean? Like, it's like we want to be able to help and be some of the smartest VCs to understand how these opaque industry works. But then again, we also definitely don't want to work with the companies that need us to be able to do those. So I would say it's a little bit of a combination. I mean, we learn a ton from talking to startups because if they're good, they're the best in the world at doing customer development. But we also spend a lot of time talking to corporates to really understand how they're thinking about the value chain.
My takeaway from Adam's comments, and please correct me if I'm wrong, is that the markets are nascent. We're talking about new companies selling new products into markets that likely don't exist because these value chains are still TBD. The big, I think a big mistake that many founders make is that they seek latent demand. They look for existing markets to sell better mousetraps into. And if you look at a lot of the big successful companies of our generation, when they started, they were selling into, or they were hoping to sell into what at the time were very small or non-markets. So the question, the multi-billion-dollar question really here is, what am I building and where is the macro environment going that could create a huge opportunity for my product that would underpin an amazing business? And the reason why you don't have an algorithm sitting here talking to you guys, you have a human being, is because the answer is unclear. And we on this panel have a very, I think, we live a contradiction where we have to apply our kind of past experience towards making decisions on companies or on themes where there's no, where the success cases will be outliers. So we're using experience to hopefully find outliers and of one type outcomes. And for you guys out there as well, again, we're talking about, it'll be very difficult for you to articulate a market or articulate an opportunity because, again, those opportunities in those markets don't yet quite exist. A lot of inbound kind of AI-related ideas that I get are around existing, very well-defined opportunities in healthcare, opportunities in industrial applications. So, for example, AI for using computer vision for pathology, for example. Like there's many companies going after applying computer vision, deep nets to pathology to identify tumors, to analyze pap smears, to do bone marrow stuff. I mean, like there's all these cool tools, and the reality is that if you look in the literature, there were other types of technologies that were invented to do very much the same thing, but those didn't make it to market for a number of political reasons in the healthcare system. And so the question becomes not just how do you build the technology, but how do you navigate the politics and how do you time your product to be able to overcome these macro challenges that are out of your control. So I'd encourage a lot of you guys out in the audience to think about that and talk to me when you have.
So James, over to you. Robotics, not to leave that out. I think most people understand task automation. A lot of discussion these days around service automation. What trends are you seeing in terms of technologies and applications in robotics that you think is exciting?
That's a great question. I came prepared because you told me about it beforehand, so thank you. But before I answer that, let me take a quick poll of the audience. Who's starting a company right now? Okay, how many people are thinking about starting a company? Okay, how many folks are technical? Are you raising your hands yet? And then how many folks are on the business side? And then how many folks have built some sort of machine learning model already in the last 5? Okay, great. Okay, so I don't know, I'm not going to say anything that smart. Like on the robotics side, what we've seen that's interesting is that on the one hand, the calculus around figuring out the math around labor replacement is pretty straightforward. And we almost never see anyone do it in a smart way or in like actually go through the pain of sort of talking to customers or sort of actually figuring out the math. And in the cases where we've invested in robotics, it's been mostly because the truth is, like, the components are mostly off the shelf, and sort of one of our founders said, the truth is, my components have been here for like maybe 10 years, right? That he was able to build this stuff while he was in grad school. But what's changed is sort of on the one hand, sort of he actually did the calculus and it was like quite good, sort of overwhelmingly positive. The components were now readily available, so things were easy to assemble. But critically, there was a culture change on the side of the customer, where the customer now is open and interested. I think that if you were to compare sort of like, so here's a loose analogy or a torture example. For the last 3 years, we've been putting together a landscape of machine intelligence companies. And the first year, a bunch of sort of big companies and academics were interested. The second year, a bunch of entrepreneurs, and now it's like a bunch of corporates, right? And where every big corporation says, "Oh, I want some of that," and what that is, they're entirely unclear. They have no idea, but they know they want something, right? And we're not quite at that point with robotics, but we are very close, right? Where the eagerness and the sort of like the glimmer in the eye of the part of the customer to realize that there's some, sort of something could change around their process, around their work, it's right there, and that's, I think, part of what makes it exciting. I think that sort of customer demand side and the way that that's changed is sort of a fundamental dynamic. And I mean, I think sort of, I'm just like a dumb, boring CVC, but I feel like the three of these guys have very specific practices about the way that they think about AI investing that makes them different and interesting. Whether in your case, deep cooperation with corporations, in your case, slightly kooky technologies, but also like visionary
investors,
deep tech, and then obviously DC with your deep thesis focus and like sort of lots of partners around sort of the ecosystem. And so, I don't know, was that, I feel like there, just on the robotics side, there is something happening, but it's not the same as machine learning. How many people are hardware people? Okay, so you guys are like dramatically out of fashion 5 years ago. You're still kind of out of fashion, but it's getting close to the point where people really want you, right? And so, keep on going, I guess.
Now that Andy Rubin has left Google, though, and his robotics buying spree, is there less enthusiasm in the space?
I don't know. Has anyone been to that office?
I have. Yeah,
like,
that's people.
That's incredible. I mean, it's like right by. It's really close to where we are right now. And I think, no, because the truth is, in the case of Rubin, I don't know Andy, but like in the case of Andy Rubin, sort of, you get the strong sense that there was sort of like this desire to buy up a bunch of stuff at Google, but now we're at the point where a lot of other corporates have said, oh, you know what, actually, this is really valuable for us, we can do a bunch of things. And so to a certain extent, the fact that Google is less active, I think is a better thing for the ecosystem, because they were doing really exciting things with non-economic motives, which creates all sorts of problems throughout the ecosystem. Lots of great engineers get paid too much money to do nothing, right? Well, now we're at a point where like there are these great engineers being deployed out, actually selling things to customers, and I think that's really exciting.
If I could actually add to the robotics question, this comes as much as from my experience at McKinsey than it does at Data Collective. But I think one thing with robots is if you build robots that other people have to babysit, it's actually not as effective. So what seems to work well is if you actually manage to integrate into the existing workflow somehow, even though people do some weird things, right, you have to actually, to be honest, justify that cost by being able to really replace like a whole function or a whole part of people's job. Otherwise, you just have more technology and more people to manage it in a bigger integration challenge. And no matter how excited certain executives are, it will fail if you can't get everyone on board because they will throw you out after pilot. And this is especially true, I think, in some robotics applications.
There's nothing more painful than doing diligence on a very promising robotics company and talking to a customer, and the customer actually ends up being honest with you and says, well, we're not really going to pay. And I think sort of like that happens a lot right now, that we are still in that phase. And as entrepreneurs, I don't know, this is like more of a, I hate to be pedantic, but as entrepreneurs, when you give us diligence, like sort of references, really have a good idea of what they're going to say, because we pay a lot of attention to that as a signal.
Just one comment on robots. I struggle to define what a robot is. My girlfriend calls me a robot sometimes. I'm not sure if I'll call myself a robot.
Different issues entirely.
So my advice to founders is not don't try to bucket yourself as an AI company or a hardware company or a robot company. Try to identify yourself as a business. When I started venture 10 years ago, when James was a little boy, I was fortunate enough to be doing venture at a time when there was a lot of emphasis placed on assets. You build a great technology, then these big companies with a lot of cash on their income or on their balance sheets would come in and spend $50, $100, $150 million and buy you out after you show some kind of proof of concept. The reality is that nowadays the technology has gotten so complex that these buyers have become cognizant of how much it really costs to integrate that technology into their existing technologies and businesses, and they compress their asking kind of bids or their bids to purchase the companies as a result. And so if you are looking to build some kind of shiny object and call it a robot and hope somebody is interested in the robot, well, good luck making money for yourselves and making money for your investors. I would encourage you guys to think about what you are as a business and how that business is interesting, why it's an interesting business, and try to carry that forward and be rewarded for your business where the shiny object is simply an enabler of that business.
Good segue. Let's move into the topic of investing. So back to you, Gene. What are the milestones or characteristics for readiness for initial equity investment do you feel is needed in the space?
Yeah, absolutely. So I'm not going to hammer on the obvious things. I think Shahin has told you that it needs to be a business. If that's not obvious to you already, it's just not going to work out. And you actually have to have a good team. But I do want to focus on what I think is particularly unique for AI investments and why some of those things are hard. So I think you need a really good mix of a tech team that has both sort of researchy capabilities as well as software capabilities if you want to make AI a core component of your stack. The reason is that the field is actually moving so fast that if you aren't up on some of the latest technologies being implemented and you can't put them into production, you will be leapfrogged. But on the other hand, right, great PhD students do not always make great engineers. It's a very different thing to take a Python script, an R script, and train it on a couple GPUs as to build out an actual data pipeline and have it in production. Another thing that I would encourage you to think about is a problem that AI actually really helps in. So this is something that we run into a lot at Data Collective, is either you have really, really shiny AI, or you have this sort of SaaS software and you're really hammering in on the AI, and the AI. It's that's not what people actually want. This comes out during customer diligence too. The most exciting thing, right, is to put all your data in one place. So at some point I was doing some work for CMS, which does Medicaid, Medicare stuff. And I was so excited when I got that project. I was look, we have all these digital health technologies, we can do all this clinical decision support, I can predict who might have heart failure, who might have a mental health issue. And then I looked at the claims database warehouse, and I was like, well, shit, everything takes, 6 months to 9 months to reconcile, so if you're going to have a heart attack next month, that's too bad. And then the value there was 90% see if we could put that data together. Or sometimes it's just a really, really shiny SaaS tool, and that's what people are actually getting out of it. So if you're just pitching the AI, but the value is that's not what the problem needs, you should probably really consider if your solution is technologically appropriate. Let's see, especially in this domain, I think there's an amount of what I call intellectual humility that is necessary, right? The technology is moving fast. Deep learning is the biggest thing now, and if you've done your PhD in deep learning, that's fantastic. But to be honest, in 10 years, it might be Bayesian networks, it might be Markov models, it might be something that hasn't even been invented yet.
You're hoping it's Bayesian
networks,
yeah.
A little bit. But what I'm trying to say here, right, is we do occasionally get founders that are my algorithm is the best, and it is best for this problem because of this. And at the time, they are 100% correct. But if you can't move off of that, you will not survive. Obviously, proof that customers want it is good, and what's even better is if it's a no-brainer that you're solving. I think this is a little core to maybe data collective in our thesis, is that if you're solving something like nitrogen pollution in the water, curing cancer, reducing our energy needs, at some point, you know that the world needs this. And when you solve those kinds of problems, you're actually de-risking the market. We will take technical risk on you, but we aren't worried that people want cancer cures.
And that's not true about every investor. I think it's critical to understand who's willing to take technical risk and who's willing to take market risk. And I think that, sort of, you guys are both willing to take technical risk. I think you guys are probably, not really. I mean, you
have a spectrum here.
Yeah, and it's just really important to understand, like, the personality of the firm and sort of what they care about. I mean, you're talking a lot about creating businesses, but the truth is, it's mostly because you're talking to these deep, deep nerds who have built super deep tech most of the time, right? And so it's
a unique problem.
Yeah. I'm sorry, keep on going. I'm sorry.
Yeah, no, I totally agree. And, there's a lot of great investments that we cheerfully pass out. We're like, they'll probably make a lot of money, but they aren't doing the kind of thing that we like, right? And that's not anything against you, it's just it. Another thing, real technology in product sense, I find that data and AI products are even harder to explain to people than most. You have what you're saying, like the enterprise, I want an AI thing, but that's very different from actually saying, I've productized this into something that I can understand, that my customers can understand, that my junior level salespeople can go and explain to people, and they just immediately get it. And that's different. And I think the last thing is that potential for data flywheel effects, right? Like, one of the core reasons that Data Collective was started was really that we believe that when you actually amass that data and apply cutting edge models to it, you get a larger and larger advantage. And therefore, you bring on more customers, get more data, and that makes your product super sticky and defensible, and much harder for other people to leapfrog you. So I think overall, that's sort of my list of things I think are pretty unique to AI companies that are really driven by the pace of innovation here, as well as the newness of the technology right now.
Great, thanks. Adam, over to you. Any investment terms in the space that are unique or maybe differently applied than what you typically see in an early stage venture deal?
Sorry to have a boring answer, but no, not really. I don't think it's not something. So we're generally quite early stage. So we usually syndicate within rounds with lots of other investors. So yeah, I would say from a actual what the term sheets themselves look like, I would say they don't look very much different from other investments.
Everyone else has the same experience?
I think terms are completely arbitrary. There's no rule. You can raise your first round can be a $15 million round. I did a $20 million seed round in a company. So there's really no rule. You shouldn't be optimizing for terms. You should be really, and I say this as a VC obviously, but it's really important. If I were a founder, it's very important to find an investor who really believes in what you're doing, wants to be your long-term partner, has the intellect and the wherewithal and the network to really be able to help you identify your blind spots and help surround yourself with people that will take you to the next level. And there are no rules in this game. There are no algorithms, because otherwise, if there were, there would be a machine that would just dole out money. You put in your business plan, and it would put out cash and share, and it will take shares in your company.
Let me just I was thinking, you've been talking about differences with AI companies. I do think that there is the reality that I think for the folks who build models, like you realize that building machine learning models is really different than normal software development. And the truth is, if I were to think about the cases where companies that I've invested in have failed, it's in part because the engineering team, while great, thought really in normal engineering terms, and that meant that the sort of like the knobs they're used to turning sort of just don't work as well. And sort of in some cases, rather than continuing to answer a specific question, they should have recast it And I think that sort of understanding is actually fairly uncommon in engineering world. It's even more uncommon in product management world. It's even more uncommon in CEO land, and it's extremely uncommon in VC world. I do think like sort of, especially practitioners like the three of these guys here, like will have thought about it and seen it. And I think having that perspective is actually going to be incredibly critical sort of when you're in like month 6 and it turns out that like the data that you've collected and that wonderful example that you've shown really is BS and doesn't work at all, and you need to rethink it, right?
Well, I wouldn't say that it's BS. I would say that technology is
I'm just saying like when you're in that crisis,
Right.
then I think that actually having VCs who've at least been part of the building of AI-related companies is going to make a huge difference, because it means that you'll panic about the right things rather than the wrong things.
Yeah, James brings up a good point, because in most cases, the original technology is scrapped. So if you guys are resting all of your laurels on something that you've built, whether it's code or a widget or something, know that even in the success case, there's a good chance that whatever it is you have is not going to be the basis of what's going to make your company succeed. So to James' point, don't focus on the things that don't matter. Focus on the things that do matter, which is, again, what do I need to grow this thing? What am I going to be selling? Who are my customers? How is this an interesting business? And the technology is just an asset that we'll build to serve that need.
Actually, on the terms question, I will say I think, and I realize this from the investor side, that occasionally, especially among very young first-time founders that may be brilliant, there are somewhat inflated valuation expectations, because it's getting a little sad how many times I've been quoted to say like how many $1 million is a good machine learning engineer or a good machine learning researcher for acquisition. Like an acqui-hire should not be your exit strategy if you want venture funding. And what I'm seeing then is, because this talent is so hard to hire and so expensive, sometimes people are raising far too much money and then just throwing it at recruiting at NIPS and trying to get the smartest people in a room and seeing what will happen, right? Like, and that can be dangerous, because then
Although to be fair, you guys have invested in a few companies that may be like that.
there's some things under the surface. I do spend too much time doing this.
We did Element AI together, which I think was $113 million.
Element, yeah. But the critical part, fair criticism, but the critical part, I think, is that when you are raising that much, like Element AI is now held to the standard, right, of like what that round size was and what the valuation, like they don't have room to iterate and pivot a bunch of times. They have something that they need to beat, right? And if you don't think carefully about that, you can definitely screw yourself in the future.
They're Canadian, though. They'll be good stewards of your money.
Can I ask you, I mean, we only negotiate occasionally. You do this for a living. What are you saying?
From my perspective on AI companies, I can't say that I can identify a term that's maybe unique. I was wondering whether those companies end up taking a little longer and pivoting a little bit more. So sometimes founder vesting is a term that we revisit in term sheets. The company's been around for a while, and the vesting on the founder shares has gotten pretty deep in, and we need to revest them. That's about the only thing I can think of. I think a lot of it is more the diligence items that you guys deal with before it comes to us. So things more around team and what exactly is the market? Is there a customer proof of concept out there? What's data sets do you have and availability
Data
of that
access and rights sharing for the agreements.
Yeah. Otherwise, I can't think that there's something super unique. So I was curious what your answers were. Open to all of you. Does anyone want to, just to give us some context here, we talked about technologies and your perspectives. Does anyone want to share any investments that turned out better than expected and the reasons why? For hindsight?
Well, it's hard to say, because you have companies that are high flyers today, and they can't turn into smoking craters. So I don't want to be the idiot here as starts,
Yeah, I heard this is being
raving about my companies that are, turn out to be zeros in the future.
I'm also hesitating to answer, because I don't want to say that I didn't think that they were going to be
Yeah,
that successful.
We think all our companies are going to be $10 billion companies in the
I
tech
think-
lab.
Upside surprises.
Sure.
Maybe there's things that through the course of the diligence on the deal.
Absolutely. And I think any VC should be able to answer, like, what are the kind of what's the thing that
Non-obvious.
that Peter Thiel said, or Reid Hoffman, the not nonconformist.
Non-conformist.
Nonconformist, something there's a different word, I think. Non-conformist, you're kind of going against the grain. I think everybody has those. Contrarian, thank you. Ooh.
Gotta get the VC buzzwords in, guys.
Yeah, everybody has their contrarian bet, which is like, okay, this is not, if you showed this to 100 VCs, only like a few would bite. And I think that's just frankly like a conversation that we usually have around the table. And that's something that we just have to understand why we think other people will say no, and do we have good reasons or like reasons to support why we're saying yes. But without a doubt, I think like there are some, I guess kind of touching back on what we talked about a little bit earlier, is the more horizontal ones for me at least are, it's a lot less sharp. You can look at the future. The future is a lot less crystal clear when you start to think about like what the platform is. So I would say in our experience, AirMap was one of those companies, which is like definitely like you can see a future where this is going to be a really important company and then go on to do some fantastic things. But at the same time, it was a little bit hard to say that back during the seed round, which was like, is this going to be something that people like the world needs? Like, is it? What is
AirMap?
So AirMap is they basically build a network of where drones can fly in relation to each other, in relation to airports and things like that. Basically, to create some structure, and they come natively shipped on a lot of the like prosumer.
It's kind of like air traffic control for low altitude aviation, i.e., drones.
Lux is an investor too.
Opt-in air traffic control.
Yeah, so in my opinion, that's something that there are always going to be companies like that, which are you don't have the perfect accounts of like, okay, this robot cost me $20,000 and over its lifetime it generates $75,000 and I can finance it in this way. Those are not contrarian bets. There are a lot of reasons why those companies can fail, and a lot of them do. And I would say, kind of touching back on the terms and valuation perspective, like the fact that they can very clearly show economics like that create a different form of demand from a VC perspective. So that also changes, like throws another wrench in the whole system itself. So I think it's really kind of like an iterative approach, which is like balancing all these different factors which affect where the company ends up sitting. But it all depends on how kind of against the grain you're willing to go with an investment, and usually those are the ones that have the biggest upside.
I mean, I'm, sort of not to get into any specific companies, but I think the thing that's been surprising over the last couple of years has been the openness and willingness of larger corporate accounts to really take big risks on sort of machine learning models that they don't entirely understand all the time. And I think that's a good and bad thing. I am sort of waiting for a bit more of the backlash.
Yeah.
But at the same time, I think that openness and willingness to like participate and sort of buy these products, I think is really good, and it's going to lead to a lot of like cost savings, success. And I think if you were to say to me 3 years ago, what would I have predicted? I would have predicted like conservatism and unwillingness to try out new tools. But I think a lot of companies have worked out really hard on their procurement side to be able to bring in new products. Now, this have to work, and then you have to like deliver, but I think like that openness is really surprising and helps a lot of our companies.
Yeah, on that particular note, I think that they have something going on the innovation side in the early procurement. I'm still not sure, at least when I talk to corporates, in a non VC innovation setting, and I just talk to people I know that are senior at companies. Not quite sure that really goes to production. But the fact that there is a voice there and people have funded that, or their innovation arm, does mean at least there's someone with a seat at the table that's pushing that for you. On the original question, also not going to name specific names, but I think maybe this is idiosyncratic to the firm, but sometimes just really, really good UX sense and really, really good sales engine, which is very hard to diligence at seed because you have like one customer. Those are some of the breakout things that we never really expected because...
You said UX and sales what?
Sales engine, like the ability to build a repeatable sales process. Like for example, MuleSoft, we're not in it, but if we saw that at seed, it's like, oh, well, the technology itself is integration. That's not, mind-blowing deep tech, but from my friends that I know that have worked there, it's just that they just know how to sell, and they can take a junior sales rep and convert them into selling all of these things. And those are sort of, I think, what's driven that. So even as we think about the technology, some of those core business aspects may be undervalued.
Anyone want to share an experience or a company they missed and why they passed on?
We've only been investing for
We've
like
made a
18
ton of
months.
mistakes.
I don't know which big ones we've missed yet, but in a couple of years I'll be able to answer the question.
I don't know that we would have really had a chance to invest in outreach, but and in that case, I think there are a lot of cases where you make a prediction on what the future looks like and you're wrong, right? And to be honest, like I'm always glad when that happens because it's like sort of a concrete case where you can learn something and see something successful. But I don't know. I feel like we've seen lots of.
Yeah, I mean, the three of us are in Planet Labs, or when it was called something else. You're in Planet Labs.
Cosmogia?
You're not? Okay, yeah, when it was called Cosmogia. And the mistake that I made is that I overemphasized the business that they were pursuing at the time. So at the time, back in 2012, they were looking to, so today they are the largest constellation of Earth imaging satellites, selling images to insurance, to agriculture, to finance, to Google and Apple for mapping stuff, or the likes of Google and Apple at least. And so back in the day, their vision was to to open source their hardware and to give away their images for free. And so when I took this business to my partners, they said, "What? How is this business going to make money? How is this going to be an interesting investment?" And the mistake that I made was that I did not emphasize the quality of the team and their vision. Instead, I was anchoring to their initial business. So I was focused more on what it was versus what it could be. And so for you guys in the audience, know that if you're going after an existing market, that market's likely super competitive and saturated. And so that probably isn't very interesting. So the focus should be, hey, here's where we expect the market to go, and here's why we expect to be a leader in this future that we have in mind, and here's why you should be betting on us to achieve, to realize this future and make all of us a bunch of money in the process.
So, but to remind you, see, I remember bringing Siri to the partnership, and then at the partner presentation, then the demo was amazing until one partner asked a question that Siri couldn't answer. By the way, Siri still can't answer that question today. It's not just fine, right? But I think the lesson for entrepreneurs is that just because you've got one advocate doesn't mean that the advocate is now trying to work with you to convince the partnership, right? And I think like that dynamic and sort of making sure that you're set up for success, and also, by the way, making sure that the person you're partnered with actually wants you to be successful is like one of those critical tests. And it's always shocking to me when a sort of entrepreneur doesn't go and prep for the final partner meeting, sort of with the specific partner advocate that they have. Because it's such an easy thing to do, and you'll learn the specifics, right? Yeah. And this happens especially when you feel highly sought after, like you have 6 partner meetings on a Monday or whatever. But still, just having that 20-minute call or doing that sort of Saturday night or Sunday night conversation makes a huge difference. And you have that dynamic you have to remember, because from your point of view, he's the big guy with all the money. He is the big guy with all the money. But he still has to convince a set of partners that this is a good investment and this is good stewardship of the money that their LPs have entrusted them with. And sort of on your side, understanding the dynamic is really important.
All right, the last one for you before we take a couple of questions from the audience, if there are any. What are your general expectations for exits in the space? Are your portfolio companies heading towards IPO or M&A or?
All of our portfolio companies are going to become massive multi-billion-dollar IPOs. No doubt.
We do live in a weird time right now where, sort of the types of exits that are available, sort of the chance to go public at $500 million to $1 billion or $1.5 billion is really tough. And because that doesn't exist, it does create all this weirdness on the part of VCs and our behavior, because it is true that suddenly we are waiting for that. In his case, the 15 companies are going to be worth $10 billion. He spends a lot of time waiting for. But for more mediocre investors like me, the couple of companies are going to be great. You sort of feel like you do end up making, I think, suboptimal decisions for them sometimes, because you are pushing or waiting for that big exit, because the rest of them just aren't going to be liquid in the same way.
Are you finding you have to fend off acqui-hire offers and you've got these highly talented teams? Does that come up or?
Yeah, it does. It comes up regularly. I would just to add to that. If we zoom out for a second and forget about AI, going back, if you look at the themes that have been popular in the past, if you look at, when I first started doing venture, it was, semiconductors and the cloud, and then it became, SaaS and, Web 2.0 and ad tech and then, big data analytics, Solo-Mo, and all of those kind of thematic, areas or theme-driven investments. You had a good number. You had some very early, high-profile exits that got founders and investors and engineers excited, and then you saw those numbers starting to get compressed as more and more product entered the market. And then at the back end of the funnel, you saw these great companies, these great outcomes like Box, for example, emerged because of their ability to really nail down the fundamentals and show real metrics to the market. And so I do think there will be plenty of M&A, but I don't think those M&A events, at least not now moving forward in this particular area or buzzword, AI, will be attractive for us as investors. Now I think we're at a time when it's really going to be about, again, and I say this, probably it's the 10th time that I'm saying this, but it's going to be really around the fundamentals of the businesses that are going to drive value, and they would happen to be using AI as a tool, as I'm sure they will be using many other tools in the future.
One thing I would point out is that us, like Comet, have also been very interested in verticalized AI. The thing you start to run the risk of there, right, is you end up having very few customers that have the scale and really the capability to use your product. So you need to become extremely indispensable, or otherwise your exit opportunities, right, like you're actually in a pretty bad position for negotiation if your only option is really to sell to them. And I think that for some of the vertical AI companies, either you're going to become full stack and be able to deliver end value to somebody, or you must have the entire enterprise depends on you, or you're going to be taken out for less than you want to be.
I would say kind of just one last point on that side is a point that I think, James, you touched on a little bit earlier, is around corporate appetite for both either a pilot or like integrating these solutions or buying the companies. I think that continues for us to be one of the variables that we track very heavily, and across different industries this looks very different. So it may be hard for me to go to an orange farmer and say, hey, you really need to like put this sensor on every other tree because you'll have the best oranges, it'll be awesome. But somebody who builds cars, obviously you don't have to work very hard to convince them that hey, connected vehicles, ADAS, autonomy, kind of mapping, all these things are mobility as a service, I'm saying big words and you should be scared. So I think really the appetite of the industries themselves have a lot to do with the M&A activity that we can expect to see. I think in kind of this technology, whatever 0.0, 3.4, I don't know what we're on, but whatever this kind of batch of technology is, it's not just going to be the tech companies of the world that make the acquisitions, it's going to be the agriculture companies and the manufacturing companies and the automakers that are starting to do these. So I think in that regard, I think the M&A activity will start to increase, both from an appetite perspective and from a use case perspective.
Okay, and so now I'll say something that entirely contradicts everything I've said, and I think that you've said up to now, which is, machine learning is different than normal software, than traditional software, and the business characteristics of machine learning models are different. I can articulate some of the ways that are different. I can't articulate all of the ways that are different. And I think that there is out there sort of a set of, in the solution space, there are different business models that are available for machine learning companies, and I just can't tell you what they are. And there is a company out there right now that is going to figure out some version of sort of your little data flywheel that's going to be have $0 billion of revenue, raise hundreds of millions of dollars, and then one day turn on the pipeline and be worth an incredible amount of money. And I just can't tell you what that is. But I will admit that yes, I believe in fundamentals, blah, 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 blah. But at the same time, there is some magic or some difference around machine learning economic models. And I am looking for that, right? It's not natural for people to pay for the same copy of software like pay lots of money for it, right? Bill Gates kind of forced people and made that up, right? And it's not natural for us to stick people's data like on someone else's data center. Like Mark Benioff convinced people to do that, right? And it's not natural for people to treat, sort of their users not as their customers, but instead use them as like product, like data to sell to other customers. Like Google did that, right? And I think like those fundamental business model shifts, they will be incredibly valuable, and they're going to be so hard for us to figure out. So if you're the next Larry Page, come talk to me.
Yeah, hi Jess.
All right. We started a little late. Apologize for that. We want to leave some time for networking, but a couple of questions. Anyone have any questions?
Hi. Thanks very much, all of you, for your comments. I really appreciated listening to them. So as you know, the output of especially learning-based systems can be very challenging to scrutinize and to validate. So I'm very curious, how do you have a conversation with the companies that you invest in about like trust and validation and the whole reason for the existence of these systems are because these problems are very challenging to solve. And so how do you know that the output of these systems are correct? How will they persuade corporate customers to trust the answers to these systems? So I'm very curious how you have that conversation.
I often ask about their test sets, right? Like I really start to dig in, how did you validate this? And if you're doing it on people, like what were the demographics that you validated it on? Did you take the ImageNet data set? Because it turns out that doesn't work in most use cases. It works on stuff that you can find on Google Images. So I really dig into that. I start to ask, actually, people don't appreciate often about technical diligence. Yes, we're asking about the technology. We're also seeing how you think about things. Like when I give you something unexpected in your demo and it doesn't work, like can you sort of tell me why or how you're planning to go about debugging that? You're just like, oh, haha, seed-based company demo, sorry. And it doesn't have to work on day one, but I need to know you as a technologist have the wherewithal to strategically think through that.
Yeah, I guess Gene hit on most of them. I think at seed stage, one of the best things we can do is talk to customers, which doesn't really as much de-risk the technology. It de-risks your understanding of what you're trying to build, which is actually in some cases is a lot bigger. I mean, I think as we can look at kind of the core output that you're expressing that you want to be able to provide, and I think honestly, our calculus is a little bit around like, do we believe that the technology can do that, and do we believe that this is the team that can do that? But I would say kind of the bigger pieces around validating that you're approaching the problem in the right way. Because if you're a lot of PhDs working on the wrong problem will not generate a ton of value. The piece that you hit on that I think is really important that I want to reiterate is corporate trust. So I've met a company that wanted to solve a solution that were providing information about chemical use within agriculture. And the feedback that we got from customer after customer is like, this would be amazing if this worked, but the fact of the matter is if it's wrong and we don't put down the pesticide that we normally use and it kills the rest of our field, that's too much of a risk for us to take. So like on the surface that may have looked like, okay, that's cool, I can see that your sensor can see this certain type of thing, but if you go out and talk to customers and they're like, look, I'm not ready to like put that much on the line, that's like a real risk for the company. It was one that we I didn't talk to that customer knowing that was what I was trying to find. It just kind of like came out when I asked like a few follow-up questions. And so I think just being able to really understand your way around the customer is the right way to do it. Because you as the technologist will know if it's realistic. And I think without kind of totally opening up the hood, I think you can de-risk a lot of that from an investor's perspective.
Well,
Go ahead.
And you can also sort of look at it from there's a customer's perspective, there's also a technology perspective, right? Like there are a lot of times that I've called BS purely because it's like, you're saying you're using this and this is the stupidest thing to use, or I know you're never going to get the data to do it. So actually, like reading some of the papers, seeing the underlying technology, pretty unique to us at Data Collective is that larger network of technical experts can save you a lot of time, and then, it really helps us think through if you'll ever get there. And hopefully you, as an entrepreneur, treat that as a conversation to actually look at some of your technical choices as well.
So I'll just highlight like 3 quick things. One, if you're BSing your technology, don't talk to DCDC. 2, your customers are incredibly valuable and they're super precious. And so if you're raising money hold off on giving us, sort of your customer references until you really feel like there's a potential fit, and you feel like we feel like there's a potential fit, because you hate to burn them too often. And then the third thing is, my current favorite sort of like little presentation on applying machine learning right now is from this guy named Kell, who is a friend of mine, and he does like this thing about like type 1 and type 2 errors, right? And just thinking about machine learning in statistical terms and thinking about downside when people make mistakes, like I think that actually changes the way that you end up analyzing a lot of the ways that you approach your problems.
A general question about robotics, all of you. Do you envision a time that there is a tail industry to serve various robots? Like we have service stations which repair GM, Mercedes, or any other automobile. Do you envision a time that there will be a need for such a franchise?
Yes, but actually it depends, I think, a little bit on how the robotics hardware and software actually evolves, right? If it continues down the path it is right now, which is very specific, full stack, both hardware and software for each company, then they basically have, kind of like car dealerships, their own little network of people. However, from what I'm seeing in the market, there's been this push to push robots much like software. Open sourcing some of the software layers, doing SDKs for the hardware. If that happens, I think you actually need much less high-margin cottage industry, because then if the majority of those things can be quote-unquote debugged by anyone with some robotics expertise, you get a much better flow of being able to maintain things and people being able to innovate on them. Does that make sense?
All right, thank you so much to our panelists, and just want to invite people to stick around, network a bit, ask some questions if you're able to. All right.
Thank you. Thank you, Kevin.
Thanks, Kevin.